Amid the lingering forex scarcity in the country, Nigeria's official currency, the naira, has maintained stability against the US dollar, the parallel market, for the past week. But according to reports, the Bureaux De Change operators of Nigeria, popularly known as the parallel market, disclosed that the naira traded at 587 naira to a dollar, putting the buying price of the dollar at 584 naira and selling price at 587 naira, leaving a profit margin of 3 naira. Meanwhile, according to data of FMDQ, OTC Securities Exchange, the naira depreciated by 0.2% at the official market to close at 416 naira 17 kobo on Thursday. The Central Bank of Nigeria has continued to intervene in the official forex market from the external reserves in order to maintain stability of the local currency, a development that has not yielded much results as the country's external reserves continue to decline. Well, I introduced him earlier. He's the chief consultant at B. Adedikpe Associates, Dr. Biodun Adedikpe. Good afternoon, Dr. Adedikpe. Thank you for your time.
Good afternoon, Tolu, and thank you for having me. It's a pleasure to be here.
Yes, Doc, I want to start with the news in a few hours ago that our reserves dropped again by about 971.4 million US dollars. That's for Q1. Same in January, same in February, same in March. You are going to understand this better. What could be responsible, despite the fact that the crude oil price seems to be looking fairly better than what we expected?
Thank you very much, Tolu. It's an interplay of factors that are a little bit complex. But I want to start from this perspective that the usual interpretation of the downward trend of our external reserves may not be a situation of panic, as some analysts want to post it. And why do I say that? If you look at the data that compares where we were end of 2021, that's 31st of December 2021, and where we were 31st of March 2022, there was only a dampening of 2.4%. So in the terms of analysis of data, that is insignificant. So that should not on its own create any panic. That's the first thing I want us to put on one side. Now, the second issue here is the essence of external reserves itself. Okay, that is what have been successfully put away from what you earned in the past, which then gives you an assurance of how long you can continue to pay your external bills if for any strange reason you're unable to earn any income from the rest of the world, which means your external sector is completely closed. So you therefore cannot sell to the rest of the world, so there's no fresh income. So the question now is your liquid external reserve, because there are two parts to it. Okay, there's the block portion and there's the liquid portion. So what we do is take the liquid portion and compare that with the volume of your merchandise trade. So if you check that also for Nigeria, we find that the average merchandise trade for this country in 2021, January to December, was $4.208 per month. So that's a monthly import bill. When you put that vis-a-vis our external reserve, the liquid portion, as at 31st of March 2022, which was just last week, that gives you about 9.34 months cover, which conveniently is above the 6 months minimum threshold. In fact, nowadays, some people say it's just 3 months threshold you need, which means if you go by 3 months threshold minimum, Nigeria has cover of about 3 times. Okay? So in which case, there shouldn't be any panic whatsoever. Thirdly, if you look at the parallel market rates, which oftentimes most analysts make reference to, go back to September 2021, you will discover that the rates we are looking at today, April 2022, are not any different than the rates we saw 7 months ago. So the issue then is, what are our analysts putting before Nigerians? So we create panic unnecessarily because the facts and data that we interrogate in the actual market, all right, say something different than what we are posting. So all of those aside, then we now come to the crux of it. What are the challenges you are facing? Like you said, price of crude oil is quite high because of the Russia-Ukrainian war, no doubt. And of course, some other chaos in the international, market, so to say. So now, the question is, The price is favorable, but how about the volume side? We are not producing enough to get to the market because there is oil theft. And that is the major challenge for us. And I'm happy we are talking about this because we need to also remind ourselves, Nigerians, that we're in exactly this situation some 8 years ago. I recollect listening to an interview of the then petroleum minister, Diziani, an interview she granted Christian Amampo of CNN, where she mentioned that oil theft in Nigeria then was in the range of 400 to 600 barrels of crude oil per day. It's something that anybody can, fact check, all right? So if we are in that situation today, it means we recover from it somehow in 2015, 2016, then we've gone back to where we were 8 years ago. So that is really where the problem is. So we are not producing enough to sell to the former market in order to realize the benefit of the high price of crude oil and now achieve what is there, which we call accretion to reserve. That's where the problem is. So in which case, dealing with that is primarily how do we check oil theft? That's fundamental in terms of dealing with our external reserves. So if the reserves are dropping, it is because we are not generating sufficient for the major driver of our external earnings. We are about 88% in 2021, January to December, of our merchandise trade in terms of export was from hydrocarbons. So that's where the problem is.
Very brilliant way to start this conversation. Thanks for now. Let's move on. All theft. We actually looked at this sometime last week too, and it's really worrisome looking at what we lose to all theft. But there are other global issues, like you also talked about the Russia and Ukraine thing, which might affect our commodity space and all of that, already hitting hard on the price of oil and gas. Do you see all of these also having any impact, of course, on our reserves and the currency?
By all means, it will. And the way it works is this. When it comes to the currency itself, when we talk about the economics of exchange rate management, usually there are some 12 factors we interrogate to form an opinion as to whether the exchange value of a currency will strengthen or weaken. Now, one of the major drivers of that is government's policy. And that must be very, very clear. What is our position with respect to, capital flows? Do we run a regime of capital liberalization, or we run a regime where we manage what we have in a time of crisis? The reality is that we are in a kind of crisis situation today. And why do I put it that way? Whenever you look at our import bills, in fact, if you check the data for the last 8, 9, 10 years, our import bill in Nigeria has been going up year after year. And so what that means is that we are depending more and more on imports. Although, again, we want to interrogate the imports and ask the question, what exactly are we importing? Of course, if you look at that, you see close to 50% relates to capital goods, industrial supplies, and the likes. So that gives us a little bit of comfort. But the reality today is that we are a largely import-dependent economy. So to that extent, it will be playing with fire for anyone to advocate liberalization of the external sector. In which case, it is not a time for Nigeria to talk about capital account liberalization. And we can see lessons also from history of countries that ran into crisis and had to also apply capital controls to some extent. So for all therefore in Nigeria today, I will not advocate what some other analysts say. Go for capital account liberalization. It will simply kill an import-dependent economy. So it should be managed. And that means we begin to ask ourselves, what are those things that are fundamental to growth of the economy in an inclusive manner and in a way that is also sustainable? We want to grow the economy inclusively and sustainably. So how do we deal with that in the external sector? So those should be the concerns in terms of capital allocation. It's a time Nigeria must be very firm with capital allocation, not to liberalize.
Not to liberalize. Now let's also look at other issues about diversifying our economy so that we can get more of forex. I'm always very interested in this. Dr. Dick, take us through this. We had an economic recovery and growth plan at the time. We also had another economic sustainability plan when COVID came up. A lot of plans here, and all of this, the focus has mostly been diversifying our economy. There's an export expansion fund somewhere to about 50 billion naira. How well has this impacted or added to our diversification agenda or aided the positivity of that?
Thank you so very much. In fact, you made reference to plans. Perhaps we should also add to that list the latest one, which is the National Development Plan, running from 2021 to 2025, okay? So we have never been short of plans. I mean, as a young economist, my first experience of National Development Plan in Nigeria was the plan for 1962 to 1968. So we've seen different plans over the years, but where we have been always weak is in execution. And why is that so? Because we measure the wrong things. And I want to emphasize this. Until you begin to measure the right things, you are not likely to get value from the execution of plans. And there are two issues, that are interacting here. There's a difference between knowing what to measure and knowing how to measure. We'll be putting emphasis on how to measure rather than emphasis on what to measure. So what should we measure? So now it means then that if we want to really grow the economy sustainably, first thing to understand is that the economy itself is diversified. And I have a particular, pie chart I use to demonstrate that, which shows clearly, using official data anyway, not data that I created, that shows clearly that economic activities are taking place in several sectors in Nigeria. Going by classification by the National Bureau of Statistics, 43 sectors aggregated into 19, you find that there is a contribution to GDP by every one of those 19 sectors. That, of course, shifts every quarter. So if we are going to make any change in that, and that's the crux of your question here, we must look at the oil economy and look at the non-oil economy. The problem with Nigeria is that the domestic economy is diversified, but our foreign earnings are not diversified. And so how do we increase that? We made reference to export promotion fund. We've had different versions of it also over the years. All right? But if we are going to do this successfully, we must be strategic about it. And that means, number one, we recognize, for example, within the context of the African Continental Free Trade Agreement that says it is open borders within Africa. So we now ask ourselves, these African countries, they do like Nigeria, import for the rest of the world. What are their top 20 imports? The top 20 imports of target countries we want to actually move our own goods to, non-air goods, by the way, I'm talking about here. We then ask ourselves, where do they import from already? So how can we displace those countries from where these African countries import from? So what are the specifications? What are the peculiarities? What to give Nigeria a competitive edge over those countries from where they import? So those are the things we should be interrogating. Not just bringing policies that bluntly talk about we want to promote export. We can talk from now to tomorrow. Like rightly said, plan from now to tomorrow. But if we are not systematic and strategic in the execution, we won't get anywhere. And also very key to that is that it must be something that our key government functionaries take seriously. In which case, they take ownership and responsibility for it. Then the president himself will begin to demand performance from them based on those things we agreed to measure. We can now say, okay, 2022, end of 2022, where have we gone with respect to growing export earnings? Then we look at various ministries, departments, agencies of government that have something to do with non-oil exports. So what can they render as a scorecard of what they have achieved in 2022? We begin to measure that year after year. It is what you measure that people give attention to. Just like we say in economics, the basic principle in economics. Anything you want people to do, put incentive there. Because people respond to incentives. But many times, export incentives are actually manipulated and also bastardized, if I may use that word. which means there is what we call sharp practices, the process, that makes it not to get to the actual targeted beneficiaries who will now grow our export volume and value that will bring earnings to Nigeria. Those are the issues behind this. So how do we use what we make from the oil sector to grow the non-oil sector? So we must be strategic about it.
Always educating, talking to Dr. Adedipe. Dr. Adedipe, before I let you go, FPIs and FDIs, that's foreign portfolio investments and foreign direct investments, are also one avenue that a country could, of course, generate funds or FX and all of that. But economy, do you think we can attract that much investment at this time, looking at the challenges we face? I don't want to go into debt issues, but do you think we can attract that kind of investment?
Well, I will say that the kind of investment we can attract will depend on the sector that we are looking at. If you look at the information technology sector, for example, Nigeria is attractive there. Okay, we talk about telecoms, we are also attractive to some extent. And all of these are driven by two basic things. One is the number, quite all right. The other one is the capability of our youth, which, of course, again, my own interpretation is different from the narrative most economics post here. Our children are sound, and of course, in terms of capacity to learn and to deliver, they have the capacity. And the proof I have for that is simply, anytime they go on the global stage, you see them come out excellent. So when people say that our our educational system is rotten, I always query it. And it's very simple. Each time these children that are produced by the educational system go outside of our shores to compete, either in graduate schools or in global competitions of any kind, they come out tops, which means there is something that we are still doing right. So the question should be, how do we expand that? So when you look at most of the big players in that sector, investing in Nigeria, Microsoft, Google, Meta, all of them, okay, there must be something they are seeing here that makes them want to invest here. So how do we expand that? Okay, that would be the way I look at that. Then secondly now, that is about, FDIs. Now when it comes to portfolio investment, there is very little we can do in 2022 because it is a pre-election year. Check the data from 1998. 98, 2002, 2006, 2010, 2014, 2018. FPIs, foreign portfolio investment, had always been tentative in any pre-election year. So usually they either move out or those planning to come in remain tentative. So in which case, even though there's interest rate differential, especially between the Nigerian naira and the US dollar, which is the international currency we always look at, that differential ordinarily is what we put aside the risk premium. But as it were today, and with the pre-election year we are in, the risk premium is strongly contesting with that interest rate differential. And so that might not be sufficient to make foreign portfolio investors troop into Nigeria in 2022. Maybe after the elections in 2023, and then the outcomes are also accepted by Nigerians, and we are ready to do business as usual after, then we can begin to see FPIs come again into Nigeria. So, but in a pre-election year, based also on the history we have seen in the last couple of years now, maybe running to decades as it were, then we might say that we may not expect any major inflow with respect to capital importation. So it is about managing what we have now. Of course, I know because of your time, I won't go into the issue of normalization in the advanced economies and how that impacts capital flows. All right, but let me leave it there for now.
It's always interesting, Dr. Adedipe. I wish we could go on and on, but that's what time can take today. Thank you so much for spending your Monday afternoon with us. Dr. Adedipe is the chief consultant at B. Adedipe Associates. Thank you so much, and do enjoy the rest of your day.
Thank you for having me. God bless you more.